Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to dive in and look at 3 high dividend stocks that I plan on buying in the month of July 2023. These stocks are solid companies with good dividend history. These are some of the stocks that I want to buy in order to create a portfolio that pays me dividends each month. So grab your drink, sit back, enjoy the video. Do me a favor, like and subscribe. Please remember that this is not financial advice. This is just me sharing. With that said, let's begin and check out these stocks. So the first one I want to talk about is Abbvie. The ticker symbol is ABBV. For those of you that are not familiar, it is a research-based biopharmacy company. It focuses on treating autoimmune disease. Some of the things that they work with is hepatitis C and blood cancer. So I've been in and out of this company, but I'm definitely going to start focusing on buying a little bit more of it and starting a position soon. And my plan is to get at least 30 stocks to create that passive income. So let's take a look at some of the performance. So the last 5 years, it's been up about 37%. Year to date, it's down 17%, and then the 1 year is 13%. So you look at the high of 168 and then your 52-week low of 130, and then you got your dividend yield of 4%, PE ratio is 31, and the market cap is about 235 billion. Now if we go to Seeking Alpha, 10-year performance of this, if you would have invested on it, it would have been up 211%. Now if we swing to Yahoo Finance, what I wanted to show is a comparison with the S&P 500. So looking at this chart, the past 5 years has been doing better than the S&P 500. So you can see the blue one is the S&P 500, and then the other one is the Abbvie. So now if we go to NASDAQ, looking at the dividend history, as you can see, PE ratio is 31, the dividend yield is 4.47. Annual dividends of $5.92, and your ex-dividend date is 4/13/2023. If you look at it, it's been a solid, consistent dividend, weighing all the way back as far as 2013. So if you look at it, it's increasing as you go, with 2018 to 71 to 96, and then they went to $100. I mean $1, and then $1.18. And then 130, 140, 148. So let's take a look at Simply Safe Dividend based on their dividend safety score. They're rated as safe. Again, the dividend yield is here. Looking at the key metrics, you can see payout ratio is 44, which is a little bit higher for biotech, and then your forward payout ratio is about 54. 99 years of dividend streak without a reduction. Looking at the dividend growth, you can see the last 5 years 17%, the latest is only 5%. And then if you look over here, in an uninterrupted dividend streak of 99 years without a reduction, 51 years of consecutive increases. And then payment details, you get paid quarterly in the months of February, May, August, and November. Your annual payout is $5.92. Ex-dividend date is about July 13, which is 13 days away. So if you want to invest that before the ex-dividend date, and then your payout date is August 15. Looks like it's valued, and then you can see over here, 52-week range is close to the 52 range. PE ratio is 12, and then you got your healthcare. Looking down under, you can see the free cash flow, earnings per ratio, payout ratio, earnings per share, sales growth, sales in billions, return on equity, and then return on investment capital. Now if we go to tip ranks, based on their 12-month forecast, they have a 29% upside. and then you got your high of 195, average of 173, and a low of 141. Based on their analysis, they rated as moderate buy with 5 buys, 4 holds, and 0 sell. The next one I want to talk about is Flowers Foods. The ticker symbol is FLO. This is a company that engages in the manufacture and sale of baked products. As you can see from the picture and the website, I buy a lot of the bread. I like this one right here, Dave's Clear Bread. If you never had a chance to taste it, it's really good. But that's pretty much in wonders. So if you look at the 5-year performance of this, it's up 16%. Then you got your 52-week high of 30, then the low of 24. PE ratio is 24, and then the dividend yield is 3.69. Now, looking at Seeking Alpha, 10-year performance is only up 10%. And then you got your over here your PE ratio of 20, and then EPS of 1. Now, swinging over to Simply Safe Dividend, based on their dividend safety score, they rated as safe. Dividend yield is about 3.69, and then you got your market cap of 52 billion. Price is about $24, and then you got key metrics: 20 years of dividend streak without a reduction. Payout ratio is 41, which is low, and then you got 70% payout ratio, which is a little bit higher. During the recession, they've increased it. If you look at the dividend growth, the last 20 years is really good, 28%, which is very fast. Last 5 years is only 5. And then you got your uninterrupted dividend streak of 20 years without a reduction and 20 years consecutive increases. If you look at the payment details, you get paid quarterly in the months of March, June, September, and December. Annual payout will be $92 per share, and then your ex-dividend date is June 7, which has passed. So if you look a little bit more, 52-week range is close to the low, and then your PE ratio is right here 20 versus the consumer staples of 21. Then you get your payout, earnings payout ratios right there, 77, free cash flow 65, earnings per share, and then you got free cash flow per share, sales growth right here, total sales, outstanding sales, return on investment capital, and then return on equity. Now, if we swing over to NASDAQ, looking at the dividend history, you can see solid, consistent ones dating all the way back to about 2012. And then you can see it has increases each year. So P ratio is 24, dividend yield is 3.75. Now, if we swing to tip ranks, based on their analysis, they rated 8% upside with the high of $30, the average of 27, and then the low of 24. They rated as a hold with no buys, 2 holds, and 0 sell. And then the last one I want to talk about is Cisco. The ticker symbol is CSCO. This is a company that engages in design, manufacture, and sales of protocol-based network products. Another company that's been here for decades. It's a great company in my opinion. If you look at the 5-year performance, it's up 19%, and then for a year, 20%, and then your year to date is only 6%. Now looking at Seeking Alpha, 10-year performance of this is up 107, and then if you go to Simply Safe Dividend, based on their dividend safety score, they're rated as 91, which is safe. Again, the dividend yield is 3.5. Market cap is right there. Now, if we swing over to key metrics, you can see payout ratio is 43, which is low for most companies. And then you got your forward payout of 39, and then 11 years dividend streak without a reduction. Dividend growth for the last 10 years, 18%. Last 5 years is 6%, and then the latest has been very slow. Again, 11 years without a reduction, and then 11 years of increases. Payout details, you get paid January, April, July, and October, and then you got your payment annual payout ratios in there. And then it looks reasonably valued. It is higher in the 52-week range, so it's in the high side. And then you got your PE ratio right here. Now if we go to the dividend history, you can see solid, good, consistent dividends as we go through the year, right? Now if we swing to tip ranks based on their 12-month forecast, they rate almost a 9% upside with the high of 65, the average of 56, and then the low of 51. And then you got moderate buy, which is 5 buys, 9 holds, and 0 sell. So now if we go over to my plan on what I'm going to do in terms of putting all of this together in a portfolio. So with Abbvie, I plan to buy 30 shares, and then Cisco, I plan to buy 67, and then Flow, I want to buy 101 shares. So I want to break it down. So these are the months you're going to get paid. Equals for Abbvie, if I buy 30 shares, I would get an annual income of 177 just by dividends alone. For Cisco, if I bought 67, I would get $26, and then I will end up with 104, and then the Flow would be $25, and then I will end with 101. So you can see from the chart, I'm getting paid each month. So that's the plan. I'm going to slowly buy it until once I get to 30, then I'll start working on Cisco, get into 67. Once I get to there, then I'll go to Flow. So I'll slowly build it. It's going to take some time. I'll definitely put updates on those things and keep you guys in the loop. All right, thank you so much for watching, guys. Do me a favor, like and subscribe if you haven't done so. There's also other videos if you're interested in other dividend companies that have also been reviewed in the past. Hope you like this video, guys. Stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.